Good afternoon, everyone. My name is Kanupriya. I'm the Chief Business Officer of Tazapay. Tazapay is a proud, homegrown, Singapore-headquartered fintech. We are a cross-border payment platform anchored on emerging markets and built on modern rails. We are on a mission to build the most effective fiat bridge for a stablecoin-backed global money movement. So let's start with a simple fact. Even in 2025, over 90% of all cross-border money movement still happens on the correspondent banking rails. A simple transfer from one emerging market to another can take 2 to 3 days, sometimes even more, can cost 6 to 7%, and during that window, nobody knows where the money is. So why in 2025 are we still using payment rails built in the 1970s? It's like driving through a major city with heavy traffic. You hit red light after red light after red light, may have to go through random detours, may even get stopped at checkpoints for document check, and then you arrive later after having paid multiple tolls. While cross-border payments affect millions of people and trillions of dollars of cross-border trade every year, the rails are slow, expensive, and opaque. So let's talk about how innovation is finally fixing this. The first stage of innovation came by the fintechs of the last decade. They asked a smart question. Why should we move money around the world when we can just hold it in every country? Well, they built local liquidity pools. Now, if a merchant or a consumer wanted to send, let's say, $100 from Brazil to Hong Kong, the Brazilian reals did not actually move. The fintech would deduct the local reals from the customer in Brazil, and at the same time, release Hong Kong dollars from their local pool in Hong Kong. This seemed fast, very delightful to the customer, but here's the catch. To be able to service this flow, they had to maintain local liquidity pools in dozens of countries, in dozens of currencies, all at once. And then, on top of it, they had to build complex treasury systems to manage all these pockets of money. Going back to the traffic analogy, it's like saying, let's build our private roads. I mean, yes, you can avoid the traffic, but think of the cost to build and maintain these roads, and they're not even going to be used 100% of the times. So yes, it was fast, but incredibly expensive and definitely not scalable. It worked for smaller value C2C payments, consumer payments, small value business payments, which could be served by these local liquidity pools. But when it came to larger value B2B transactions, which can be hundreds of thousands of dollars to millions of dollars, it's very challenging. You can't hold that kind of liquidity. So that brings us to stablecoins. Stablecoins enabled value to move money from point A to point B anywhere in the world instantly at low cost. This seemed to be the answer of all cross-border money movement challenges. And then, being US dollar backed, a lot of these stablecoins also solved the volatility risk that was posed by the preceding digital currencies. Now, the same transaction from Brazil to Hong Kong. Now, let's say a buyer has to send $100,000 to a supplier in Hong Kong. All they do is they take the Brazilian reals, on-ramp it to a stable coin in Brazil, do a digital real-time transfer to the supplier in Hong Kong, and then the supplier off-ramps the same stable coin into their local currency and to their local bank account. Seems simple, can solve everything. We don't need private roads. We don't need local liquidity pools. Cost is low. Movement is fast. But before we get too excited, let's be honest. There are many challenges yet to be solved. Firstly, regulatory clarity is uneven. Many countries have been forward-thinking. Singapore, for one, has had clear regulation and guidelines for digital currencies, usage of stablecoins for cross-border payments. And then more recently, we've had the Genius Act in the US, MICA in Europe. They're all driving further clarity. But many, many countries around the world, lots of emerging markets, have no clarity, no guidance on inbound and outbound money movement from their countries using stablecoins. So a transaction which is completely compliant in one country can be in a gray area in another. So to really make stablecoins useful, we need some kind of regulatory harmonization or at least some interoperability. Second was the last mile infrastructure. That's super fragmented and in super early stages even today. So in that example, while it seems simple, the sender in Brazil needs to have access to a local exchange or liquidity provider to actually on-ramp to stablecoin. And in another time zone, the recipient in Hong Kong needs to have access to be able to off-ramp into Hong Kong dollars. And then both their banks in both the countries need to be supportive. So a lot of these things need to come together to make this transaction happen in real time. Now we were trying to get away from the correspondent banking hops, and we're back to the same problem. Multiple platforms are involved to do the FX, on-ramp, off-ramp in one cross-border transaction. And then there's compliance. Compliance benefits can only be maximized with universal adoption. So blockchain has the ability to attach identity and purpose data to every transaction. But today, less than half the participants follow the travel rule. And that leaves us with a lot of blind spots. Super compliance can be unlocked if everyone on the network starts following the travel rule. If they send us the sender details, the receiver details, purpose data, including compliance checks, if any, then these transactions can actually be more auditable and more transparent than the traditional transactions today. But we are still far away from global compliance. So that brings us to the stablecoin and digital currency networks that are coming up today. There's Circle Payment Network, Ripple Direct, Lightspark, Fireblock Payment Network, and many others who've come up. And what they are trying to do is solve some of these challenges by creating common frameworks and common platform. So one, they are allowing sending or originating banking institutions or FIs, as well as receiving or many FIs to plug into the same platform. And what that means is all this fragmented last mile infrastructure across the world is now available and connected on a single platform. So money can actually move this time from Brazil to Hong Kong without those multiple hops. So that's one solution. And even on the compliance side, some of them are trying to build common compliance frameworks, where if you want access to all these last mile infrastructure at competitive rates, then you've got to comply with the travel rule, you've got to attach the metadata, and you've got to give us all that information. And this is driving transparency, avoiding unnecessary holdups and delays in the transactions. So solving these challenges, while regulatory clarity is only going to come from the regulators, the other challenges, if solved well, can still make stablecoins very useful where allowed and where compliant. Remittances, business payments, as well as treasury management by corporates is more and more adopting stablecoins. So today, some of these networks can enable a remittance from Mexico to India in split seconds, right? So families and friends who are working overseas can send money back to their families in instants. It's not hours, it's not days. Supplier payments can be made within an hour or less, cutting down order cycles. And FX treasury management, so, corporates who have liquidity stuck in multiple countries, they can bring it back instantly and have daily positions easily available in one place. So this is really happening. The direction is clear and the momentum is very, very real. So what does the future look like? A true internet of value, where borders fade when it comes to money movement globally, settlement times shorten from days to seconds, and costs go down to near zero. And regulators are not left behind. These transactions can be more auditable, more transparent. We look back at correspondent banking fields just like we look at dial-up internet today. Important in its time, but unthinkable in a digital-first world. The internet connected information, and the next era will connect value. Thank you.